Aloha and welcome to Alice Insurance's Risky Business. My name is Sean Satterfield, Business Development Director.
Shane Choi, Account Executive with Alice Insurance.
And today we have Tori from Hawaiʻi State Federal Credit Union. Welcome, Tori. How are you?
Good. Thanks for having me. So again, my name is Tori Kawahara. I'm a commercial loan officer with Hawaiʻi State Federal Credit Union.
Great. Tori, tell us a little bit about how you got into the business.
Yeah. So in 2015, I began my journey in finance. So I started out as a commercial underwriter doing a lot of the number crunching. Thereafter that, I moved towards the line side where I'm working with clients to help them get financing in place. Yeah.
Terrific. Tell us a little bit about your credit union. What exactly is a differentiator between you and maybe some of the other banking institutions that lend?
Yeah. So the biggest difference between a bank and a credit union is that a credit union is a not-for-profit entity. So that just means that instead of paying taxes, we give that money that we would have paid towards taxes to our members. So we do that in a variety of ways through favorable interest rates as well as other deposit products, that are also favorable. Yeah.
Okay. Great.
Yeah.
Now, on the AOAO space, we love our condos. Condos in Hawaii need loans. Mm-hmm. Tell us about the process and how that works.
Yeah. So we work a lot with the property managers to get the financials and things like that in place. So we work very, very closely with all of them. They've been super helpful to help us get any information that we would need to understand what the AOAO is going through, what kind of CapEx projects they have in the future. Some of the main drivers that we're seeing is how much are their maintenance fees going to increase in the next year? Obviously, we're going to talk about insurance premiums and how those have risen year over year, as well as some of the delinquency rates.
Okay.
So.
Yeah.
What's some examples of, you mentioned capital expenditures. Mm-hmm. What's some examples of maybe some projects that associations maybe do pretty common or something you come across pretty often?
Right. So we're seeing a lot of CapEx projects for repiping, roofing, elevator modernization, painting, spalling. These are a lot of bigger ticket items that kind of sneak up on a lot of these associations. So we're seeing a lot of financing coming up for these types of projects.
So with that in mind, what's important for associations that they have in order to get financing? One of the biggest things that they should either have in place or think about having in place?
Sure. So the biggest underwriting issue that we're seeing is just keeping that delinquency rate really low. So the way that we calculate that is any unit owner that has a delinquent fee, whether that's a maintenance fee, a late fee, miscellaneous fees, things like that, all of that needs to be below a 10% threshold. That's kind of what we would like to see for our underwriting standards. Yeah.
Any trends that you've been seeing kind of just based on what's been going on in the last couple of years, right? Insurance rates have skyrocketed. Interest rates have kind of gone off too. Inflation is another factor. What's some just general trends that you've been seeing?
Yeah, so obviously we've been seeing a lot of higher premiums, and that's definitely related to the fires that have occurred, a lot of the natural disasters that have happened over the last few years. Some of the trends that we're seeing is there's just been a lot more loan requests for these AOAOs. Mm-hmm. And I think a lot of that has to do with the age of the buildings. So we're seeing that a lot of these condos that were built in the 70s, they're about 50 years old right now. Yep. And so because of that, we're seeing a lot of, maintenance and repairs that need to be done for these types of buildings. For instance, some of the piping, we initially thought that these pipes were going to last about 100 years. They're actually lasting more like 50, right? And so we're right at that cusp right now. And that's kind of why we're seeing a lot more of these requests come through though.
Yeah. And I see on the insurance side, when you have boards deciding on, what type of insurance they have, if they should take full insurance or not, that comes into the loan factor, doesn't it?
Yes, that's correct. So another thing that we would look at is just having full hurricane insurance. So previously, I feel like it wasn't as highly scrutinized, but with all that's happened in the last few years, it's definitely something that needs to be in place in order for the AOAO to get a loan, but it's also for our unit owners if they want to buy and sell their property. So it's really important that the AOAO takes that into consideration when they do their budgets and things like that too.
Yeah.
Is there any other considerations, besides the insurance for hurricane? Is there any other specific things that lenders are kind of looking for other than hurricane insurance? Any specifics that you can kind of give us?
Yeah, I mean, we do take a look at the building value because that's obviously an important item. But in terms of specific thresholds, the biggest driver right now is probably the hurricane insurance, making sure that that is fully covered. A lot of times we've seen insurance certificates with sublimits on there. So sometimes the AOAO will need to get additional coverage to take them to that 100% coverage ratio, right? So that's something that has been an additional cost for these AOAOs.
I see. So on your end, what do you see kind of the importance of having that hurricane insurance? Just from a lending perspective, like if you are the credit union, how do you feel about associations that maybe don't have full hurricane insurance?
Yeah, I think it is just really a difficult position, right? Because a lot of times these AOAOs are asking for financing because they didn't expect to have all of these CapEx projects, right? And so if you have an AOAO that doesn't have full hurricane position or coverage, they're putting themselves in a position where they cannot get AOAO financing for any CapEx projects. And so it just limits their ability to get financing in the future, as well as it limits their unit owners from buying and selling their properties too.
Yeah, I could see that as a problem. And you referred back to the age of the building.
Correct.
And it's not just the plumbing, for example, that's a big expense, but it's also the roofing, possibly, the electrical. Those are all things that underwriters on the insurance side ask for. So I imagine it's similar to the underwriting when you folks look at it.
Right. That's correct. Yeah.
Going back to this, I think there's a document or some sort of schedule that a lot of associations, they have a professional put it together, but it's something that they also have to follow based on their budgeting. And I don't want to mention the word, but what kind of schedule would that be?
Right. So what you're talking about is a reserve study. And so that kind of lays out all the future projects that are going to happen over the next X amount of years. And so that's really helpful for the AOAO board so that they can accurately project how much in projects they'll need to, plan for.
Yep.
It also helps them to determine how much they should raise maintenance fees. It helps them to figure out all these other aspects that go into their budget as well.
Is there any metrics for that reserve schedule as far as how much they should have it funded, or how many years out they should have it planned to, that you can kind of share with us?
Right. So generally, these reserves should be funded at 50%. And that's just to ensure that at least for the next, foreseeable future, they'll be able to at least cover at least half of those projects that are planned, right?
That's good. What about the interest rates right now? I mean, the Fed just had lowered interest rates that, just the other day or today. And how does that affect the lending side? Because I imagine the timing of when boards have to decide when projects going to be in place based on the reserve study.
Right.
It's also based on how cheap money is.
Right.
So maybe is now a good time to go ahead and lend?
Yeah, I think that, it's really important to complete these projects as soon as possible. So getting financing to ensure that these projects are completed in a timely manner, it's really important just to ensure the safety of the building and ensuring the value of those properties. I also think that because interest rates are going down, it's actually very, very advantageous. So for an AOAO, it's a lot easier for them to obtain financing than individuals. It's a lot less work to get one big loan for maybe a $10 million project than having all that 100 unit owners get, individual loans, right?
Right.
So from a logistical perspective, it is a lot easier. And also the interest rate for an AOAO loan is typically cheaper than getting something like a HELOC, which is in a second position on your mortgage, right? These AOAO loans are not collateralized by any real estate. So that's also something to consider too. When you get a HELOC, you're actually putting your personal residence or your investment property as collateral, right?
Do you see like certain projects that, as the building ages, I know it's based on the reserve study, but what comes up really that you see all the time that like, if a building's 30 years, this is going to be the first thing that's going to break?
Yeah, we've been seeing a lot of piping, which is a little unfortunate just because it's a really expensive project. The thing with piping, though, is if you have a pipe that's leaking, you need to fix it immediately. You can't just let the pipe leak, right?
You can't put Band-Aids on it?
You can't put Band-Aids on it. Duct tape is probably not the best solution. So I think that because of the urgency of those types of projects and just the large ticket value, it is something that is, really important to address immediately. Yeah.
In terms of, where we're at in the marketplace, where do you feel maybe from where we're at right now to where we're going? What would you see the trend being going forward as far as, today till sometime in the future?
Just general trends in the lendings. I do think we're going to see a lot more AOAOs come up for financing. There's a lot more requests that are going to come through. And I think that a lot of us are a lot more aware that, there are a lot of projects that are kind of sneaking up on us. Yeah. So I am seeing a lot of our AOAOs do these third-party reserve studies. They are getting, third-party expertise just to make sure that, all the things that they are budgeting for are exactly the amounts that they say that they're going to be. And then also there's no sneaky projects that are coming up too.
Right.
Yeah.
That's true.
So I have a question for you guys, if that's okay.
Yeah.
So what are you guys seeing in the insurance premium market for AOAOs?
Well, Sean, you talk about it every day. Why don't you tell us a little bit?
Sure. So in the excess markets, we had a crazy 2024. And really the first half of 2025, we saw a little bit of stabilization.
Okay.
And at the end of 2025, we've actually seen in the excess markets, property insurance rates go down or premiums go down. And that's partially because of the fact that you had so many, the prices were so high back in 2024. The excess markets that had already the properties wanted to keep those clients. So they increased capacity, and competition primarily drives prices down. So we had a huge influx of carriers wanting to get into Hawaii, which drove the excess markets down. So those prices on the excess side have been extremely better. And I mean, I'm talking, we've seen 50% decreases from that side. So that's been really good for clients. On the admitted side, a little bit different. Admitted side did not have huge increases. So the three admitted carriers, Fireman's Fund, DB, and First Insurance, didn't have as much increases as the excess side did. So they're more kind of that slowly increasing. So you're not going to see a lot of relief on that side. But from a hurricane standpoint, so the excess hurricane, HHRF came in, and that drove prices down as well. So that was a big help for the hurricane side.
Right.
And excess markets followed.
Got it.
I don't know if that covered everything, but that's just a portion of it.
Expecting stuff that I was going to say. No, but yeah, what happened last year, again, substantial increases, right? But now this year, substantial decreases. Yeah. And there is a difference between the global marketplace or non-standard insurers versus standard insurers. So again, as you said, the non-standard insurers, because premiums went up so high, in some cases 1,000%. Now it's coming back down to, where it should be, which is still higher than where it was before.
Right.
But now it's just substantial decreases from last year, just where you start from last year to where you are now.
Yeah.
Whereas the standard markets didn't increase that much.
Right.
But now there's different factors still at play for insurers. So there's inflation, there's increased cost of construction, and of course, the insurers have their own insurance to pay for their reinsurance.
Yeah. One big factor to Shane's referring to, it really is the cost of insurance, or basically the total insurable value of the buildings. Everything went up.
Right.
So you're going to see that continuing to increase over time. But because of labor and lumber and all those materials, it's getting very expensive. So maybe the property values went up, the premiums came down, but as property values continue to increase, premiums will eventually start to rise again. But we've seen a nice stabilization. I mean, it was a V curve that just happened, or upside down V. Increase and then slightly decrease. But it was very problematic in 2024. 2025 had been a much better year. And we see it stabilizing in 2026.
That's good.
Because we haven't had a lot of natural disasters. Knock on wood. Knock on wood.
Well, that's the thing with insurance. It's a cycle. Right?
Yeah.
I think this for lending, do you think it's also kind of synonymous that there's a cycle with, the interest rates going up and down, just like insurance rates going up and down?
Yeah, I definitely think that there's a lot of similarities there. It's always a cyclical pattern. Sometimes it's up, sometimes it's down. But it's kind of dependent on a lot of the macroeconomic things that are going on. Of course, interest rates, in this particular scenario, it's, the age of the buildings, the AOAO buildings, because so many buildings are in that 50-year mark, 50, 60-year mark, we're just seeing a lot of deterioration.
Yeah.
So tell me more about how you guys view CapEx repairs. How does that affect your ability to get insurance premiums and get the underwriting through?
I'll let Shane start off on this one.
Thank you, Shane. Well, definitely positively, in the sense that if associations have a reserve schedule and they're following that reserve schedule, it's well funded. The associations can expect that their maintenance is not going to be deferred. The buildings are going to be well maintained, and a lot of what we see, Sean, right, it's going to be the claims that are most common is going to be water damage, fires, and where do they come from? Plumbing, electrical, right? So or even you're talking about the roof. Rainwater comes from the roof. There's water damage, but also wind damage as well. So different things, I would say, on the reserve schedule are helpful. But I think one of the things that actually came up recently was the age of the roof was one thing that was a concern for lending. I think specifically Freddie Mac and Fannie Mae had some sort of requirement that everything, including the roof, had to be on a replacement cost valuation basis. But some insurers were putting the roof on an actual cash value, which is depreciation minus, the replacement cost minus the depreciation, right? So that's actually the reserve schedule is something that we used to have that removed. And that's helped associations to receive financing.
It does.
That along with, other things like the hurricane deductible. There's been quite a change in the market lately. So not only premiums, but also the terms, right? Like the deductible, the coverages have gotten much better.
Yeah.
So that's something.
It's important to have a smart agent like Shane. Because really what happens is when you're seeking lending and there's an issue in the wording of your COIs, you go to your agent and you say, is it possible to get these things fixed or changed? And that's where your agent who's knowledgeable about what that is and the lending requirements can help.
Got it.
Yeah. So Shane does a really good job.
Oh, thank you, Sean. I'm glad you brought up the COIs, just to spell that out, certificates of insurance.
Yes.
So you guys, you see a lot of that?
Of course.
Of insurance?
Yes.
What's your process, or how, I know it's now more scrutinized more than ever. Like, what's your guys' process as far as like looking into the certificates of insurance? Like, do you guys have like a checklist, or just on the top of your head, certain things that you look out for on those?
Yeah, I would say that we're probably the more lenient financial institution when it comes to insurance requirements. Again, our biggest hitters, it's full hurricane coverage. and then just building value, making sure that, those coverages are in line with what's kind of going on here.
Yeah, I've seen a lot more boards decide to go with full hurricane coverage this past year. So it's been very positive from that standpoint. So it'll help with the lending. It'll help with driving the sales, of condos, especially if owners need to sell or at least do loans to maintain the building. So those are all key factors.
Yeah, absolutely.
Any other questions for us? Oh, go ahead. I'm sorry, Shade.
Oh, go ahead. Go ahead, Tori.
Just tell me more about, I guess, what you're seeing in the insurance industry overall. Like, do you foresee any trends? I know you kind of mentioned that it's kind of stabilized in 2026. Are you able to foresee beyond that, or is it a little bit harder to predict?
Well, that's the thing. The property managers and general managers, they always ask us for budgets, but our best guess is always just that. We can project what we think it's going to be, but the market could take a turn for the worst at any time.
Yeah,
just like Lahaina, we didn't expect that to happen and the market to change so quickly.
Right.
But likewise, this year we didn't expect the market to come back down so quickly. So there's a lot of volatility out there, but I think now with the expectation that these things can happen, I think we're a little bit more prepared than we used to be.
Yeah, I agree. I think the trend is stabilizing to lowering rates, so that's a good thing. And I think for boards, they can expect to stabilize their budgets. They can expect to not have a special assessment just based on insurance this year. Knock on wood. And for the most part, I think everyone should be happy the fact that we've gotten the rates to stabilize. We've gotten full insurance, and so I think that'll drive a lot of the business. So knock on wood. Hopefully things go well.
Yeah.
And I think it for us, a lot of our job is retaining clients, and it feels good to share good news.
Good news.
For
yeah,
once,
absolutely.
As opposed to in the last couple of years, not so good news.
It's hard to present that, right?
Yeah, it has been. Well, thank you, Tori. I think this has been a great podcast with you, and I appreciate your time.
Of course.
Thank you. Actually, just one more thing.
Absolutely. Go ahead.
I know one of your hobbies is golf. And you just tell us a little bit about, what you like about it, and just how hard it is to maintain a good golf swing.
Yeah, so golfing's been really fun. It's one of those things that it's so hard, but if you have one good shot, you're just chasing that high. And so we've just been chasing that high. We forget about all the 17 holes that we did terrible at. And then we just think about that one hole. We just keep, going for that. And so it's been really fun. It's a great way to get outside, hang out with friends and, talk to, other people.
Good for business too.
Good for business. Good for business. So maybe we'll have to golf sometime.
Oh yeah.
Okay. Sounds great.
I'm gonna be OB all the time. Anyway, thank you so much for being on the podcast. Really appreciate all that you do and just for joining us today, giving us your insight and what's going on in the marketplace.
Yeah. Awesome job, Tori. Thank you so much.
Thank you for having me.
Appreciate it. All right. This is sign off for us at Alice. Thank you very much for tuning in, and we'll see you next time on Risky Business. Take care and aloha. Like the video, comment, and subscribe to our YouTube channel. And this has been Sean. Oh, Sean. Shane Choi.
And Tori Kawahara.
Take care.
Take care.